Good afternoon, traders. This is Christian from Hertz Market Trade Group, and today is Monday, May 2nd, first trading day of the month, first trading day of the week. Well, I think today kind of, after a crazy April month, very volatile April month, no doubt we kind of started off, a new chapter for the year. And a lot of volatility, a lot of price action once again. So we'll get through some of that. Of course, risk disclaimer in front of you. Let me make sure that you see that. Everything that we're going through in these videos are for information purposes only, not giving out any advice or recommendations. And so the price action. So for SPY, amazing, finished positive for the day. Very, very whippy price action for the day. Looked like it was going to kind of hang in there a little bit, then spilled lower as we were seeing in a lot of these days. Basically, most of April is what we saw is, where the market tried to go positive or try to kind of turn the corner to turn positive or to rally a little bit. And most of what we saw in April was then there would be selling programs that would basically, knock the price action down, right where it was kind of supposed to turn the corner or a normal place for it to turn the corner. We did take out the lows today, but we rebounded. So I view that as a pretty decent positive, but one day is not a trend. I say this all the time. Days where we have seen positive price action, we haven't really seen too much follow through. Also, keep in mind, we've got a very, very big event Wednesday. Everybody probably will have their eyes on what Powell is going to say. How is he basically going to satisfy the market participants, trying to get inflation down, while trying not to, basically bring really further nasty price action to the market. One of the things that we've heard a Fed speaker to talk about is that they need prices to go down lower. How much lower? Are we going to get some of that context in there? Another question is too, and we'll talk about this more tomorrow as well as Wednesday, because the meeting's not till Wednesday at 2 o'clock. Then you'll have the press conference after that. But, what about if this, if some of the data that continues to come out is a little bit softer than expected? How much does that go into their thinking? So there's a lot of questions. There's going to be, the reason why I'm talking about this now is there's just going to be a lot of focus on this. What you might see leading up to that is a little bit of selling of the leaders, selling of hedge fund winners, some hiding places that traders, investors, funds have been in, and maybe a little bit of short covering, right? That is happening. So case in point, right? If you look at today's performers, what stood out to me was the ARK fund was up all day today. And I think was up, let's see. I have it on my sheet as up 6%. Yeah, it was up 6% today. This is the weekly chart, by the way. When you look at some of these areas of the market, they're just, they're pretty sunken below the 20-day moving average. And I wouldn't be surprised if some of these beaten up areas bounce a little bit. Now, that doesn't mean that they completely change course. And I think that you're really going to have to pay attention to whether or not things are just bouncing in a downtrend, or if they're actually, reversing. And I think given the nature that some of these things are so beaten up and so far below the 20-day moving average and the 50-day moving average, they are due for a bounce. Remember, markets don't go up in a straight line. They don't go down in a straight line either. So let's talk about a few of the more constructive areas of the market. First, I want to talk about the S&P, something that you've heard me talk about for a long time. By the way, look at the candle for today on the S&P futures. So one of the things that you've heard me talk about in these videos, if you're a regular viewer of these videos, or even if you're new, you've probably heard about the 80% rule on the weekly chart. So let me first of all move over to the weekly chart, right? On my indicator, on my charts, one of the things that I use that not too many other technicians use, because it's a homemade, it's a proprietary indicator, is what's called the TTG Market Webs, right? And what these do is they look at volume at price, and they associate a support and a resistance level based on the majority of the the volume at price. So in this sense, we're on the weekly chart. So I'm going to just spend a couple of minutes here because I think it's important for now, right? We've talked about how we've entered this year, and this triggered the 80% rule. So what is the 80% rule? I always tell people on Twitter who ask me what the 80% rule is to Google it. Google 80% rule and value areas. I will tell you what it means, but I think it's good for you to kind of see what it is from someone other than me, or hear about it from someone other than me, because there are other technicians who do use this. And it means that once you firmly establish yourself inside a value area, once you start, again, you have to start the period either above or below. Once you climb inside the value area, there is an 80% chance that you go all the way through it. Now, what happens after that? So number one, that's what I was waiting for. We got very close to that. What it wasn't complete, right? When we got to the lows on the week of this February 21st, right? But we now have come in and touched the value area, and that completes the 80% rule. So now what happens? Well, it's just like any other support level, right? It has to hold. Sometimes price action does overshoot to the downside, and then recovers. So that's in the cards for this week, because this is a weekly bar and this is the first day of the week. So we got a lot of price action to go. But I do think like this is a box that I thought needed to be checked in terms of watching this downside price action after the over the last couple of weeks, last few months actually. So 80% rule now complete, and now what comes next is we have to hold the support of 40.71, which could be a decent level to trade off of. One thing that I would bring to your attention as we kind of look at also the NASDAQ and Russell, which I will get to in just a second. I just want to go through the rest of this S&P chart. S&P, of course, that's where we always start these videos, right? So we do have the hammer bar. Also note, this happened a couple of times last week where we bounced. We just didn't go very far. We didn't get above the 5-day moving average. So this is just a starting point, right? What we're looking at on the daily chart. This is nothing, in my opinion, to kind of like hang your hat on and get really aggressive. I got to see more things happen, right? I actually unwound some risk today in some trades that weren't working in the TTG trend portfolio. I will send out a separate video on that for TTG members. But, for example, like I would like to see us at least get inside the value area for the week. That's above 41.81. So again, I'll repeat what I said earlier. One day is not a trend. We need to see follow through from this price action. It's very important to see the follow through. Anything could happen in one day. All right. So that's a short-term look. I'm looking at the 1-hour chart. Watch that 41.83. And then basically the lows of the day is something to see if we can, trade off of. Let's turn over to NASDAQ. NASDAQ, it's funny because NASDAQ is a little bit more positive in the short term, but on the weekly chart, we have not gotten, so you could see on the top left of my screen, 80% rule is still active, right? So we have not gotten all the way to the bottom of value. Now, again, it's not 100%. It's an 80% rule for a reason, because there's an 80% chance, not 100% chance, that once you start outside of the value area, climb into it and break all the way down, break into it, there's an 80% chance. Again, notice how well the top of value acted as resistance back in the middle of March, or towards the end of March, right? So that's what we're faced with now. And that of course could, we're only in the beginning of May. So that's could be active for that. This value area is the same for the whole year. So you've got a lot of year left over. Let's move over to the daily chart next. We talked about this last week, that there was a virgin point of control taken out. We're still kind of hanging in here, but nice to see this bounce like this, up 1.6%. Again, we need to see more follow through. I would like to see a move back above 13,318, or if you want a level in the Qs, actually it's a little bit different value area because there's different volume that trades in the Qs versus the NASDAQ futures, but 320.60, right? That would at least be a little bit more of a powerful bounce. Looks like price action did close right at the bottom of value for the week. NASDAQ futures did not close inside value. They closed right I'll even show you that chart very quickly. Again, different volume, and this is obviously the value areas are based on the volume profile. So different volume in NASDAQ futures versus the Qs. But I take it back. They actually did close just inside the value area. All right. So next, the wild card, IWM. IWM, take a look at that, also closed right at the bottom of value. So closing at resistance. The weekly chart, right? I think that this is nice to see them bounce, right? But unlike the, sorry, so I don't skip this. Sorry about that. But different than S&P and NASDAQ, the small caps are below value for the year. Very thin value area that we saw. We kind of came up and retested, right? So this isn't a downtrend, right? And the rest of them are also in the downtrend too, right? On the daily charts. All right. The one thing that I would notice too, I did cover or get out of my IWM puts today, but notice that this range is broken. I would like to see some type of a retest, and I think that would set up for another short up at 192.87. I think that would be really good. We've broken through here, a test or some type of a test here, and then a failure. Could be a short for IWM, because I think the chart in IWM looks pretty bearish to me. All right. So just a couple other sectors that I thought were interesting for the day. Right. We already talked about how the ARK ETF is one of the best performing areas. The semis, right? This one, the 80% rule, is just about complete too. It still says it's active, but very, very close. Your support there is 224.36. I mentioned on Twitter on Sunday evening that this is definitely one of the areas that I'm watching this week, right? I do view the semis as more of a leading sector. So I would like to see better price action out of this, right? And we've been, we've had a couple names that have reported earnings recently. We had ON Semi report today, which I view as a pretty good company. It kind of gets overlooked. It did close at the top of value, so it did have good earnings reaction. I actually started a position in this today. It's above the 200-day moving average. That's good enough for me. Remember, a name that reported last week was Qualcomm. Qualcomm's hanging in there. It's still below the 200-day moving average, still has work to do. But, I would like to see some of these areas of the market rally, right? And we do tend to look at single names for hints on what the overall group is going to do, right? We like to look under the hood to see, how some of these things are functioning. NXPI also had good earnings too, right? So one that I'll be watching is NVIDIA tomorrow, right? Closed right at 195.24. It's very close to the bottom of to the top of value. So again, some of these are right at like these short-term pivots, and they're going to need to kind of push from there. All right. So interesting level right there in NVIDIA, right? On the 1 hour chart. I think it helps to go through multiple time frames like this, because you will see a little bit different patterns on those shorter term versus longer term charts. And sometimes you can kind of see the price action begin to kind of give you a hint on that 1 hour chart, based on if it's starting to at least turn the corner, right? And what I would be watching for tomorrow and even the rest of the week is if it can get above this 195.24. If it begins to sink back down here, right, then you know that this is not out of the woods, right, in terms of volatility, right? And really, as we go through some of these charts, I see the questions all the time from traders, especially, newer, younger traders, which this is perfectly fine. Everybody wants to know all the time, like, are we out of the woods? Are we going to see things rally first? If you do your homework and go through single name stocks and look at how they're acting, they're going to show that, there's going to be levels just like in NVIDIA. Where it's going to work versus where it's not, right? It needs to climb above 195.24, right? So if you're looking to, like, if this is a name, for example, that you like for the long term, right? Or it doesn't matter actually, long term, short term, whatever. You want to see this name start to kind of turn the corner, because, if I'm getting into a name that's going to be a little bit more longer than the short term, right? I don't need to catch the exact bottom in the stock. right? You have to ask yourself, what are you looking for the stock? You know, are you looking to make bigger gains than just a scalp trade? If it's just a scalp trade, you could just trade it as a day trade. But if you're looking for this thing to kind of recover in a bigger way, then you don't need to pick the absolute bottom of the stock, right? You need to make sure, you know, in my opinion, you want to see the confirmation that the bottom is in. So I would like to see it get over this region, right, and have some gusto to the top side, right? Not small, you know, reaction to kind of inch higher, right? I want to see big green candles, right? That would kind of convince me that not only that it's turning the corner, but that the buyers have kind of stepped back in. So again, the more that you can kind of go through this process of looking at different timeframes and important names and several names and within a sector, you're going to be able to kind of formulate, you know, a decent opinion, right? And a lot of times, what we've seen over the last week or last couple of weeks is that you're just not seeing a lot of good things yet, and that means you just have to be patient. All right, so I think that's enough for one day. What I thought was also, well, let me just wrap up a couple other things here. What I thought was interesting is finally, like, some of the defensives, which have been the hiding places of the market. Remember what I said in the beginning of this video. It could be that some funds who have been hiding in these areas of the market finally are basically saying, like, hey, I don't want exposure to this group into the Fed meeting either. But I think I view it as actually a little bit healthy that finally, like, people are getting out of some of these areas that they've been in for very defensive reasons. Look at the utilities, for example, right? They've come in. Another ETF that I tend to look at is SPLV, which is low volatility equities, right? That's actually had a decent correction at this point. So the question is, are they going to start to rebalance a little bit into some more aggressive areas of the market? That's the main question, right? Because I don't think that you can, as I said, I don't think that you could really hang your hat on, you know, price action like this leading up into the Fed meeting. You know, I think that you're going to want to see buyers come in after the Fed meeting, right? After they've got the information, rather than a little bit of short covering and selling of some of the longs that have really done well so far this year. All right. What else? I think a couple of names that reported earnings are kind of interesting, right? We've seen a lot of names that have gotten sold off on good earnings. You know, watch to see if some of these names can hold their gains. Avis has had some good earnings after hours. So the main thing, what I've noticed so far in earnings season, is that we've had some names come out with good earnings, but they're not able to hold the gains. All right. That's another thing that I will be watching this week. All right, guys, have a great night, and I'll see you guys. I will see you back in the trading room tomorrow morning. Thanks, guys.